Welcome back to Central Valley Business. I'm your host, Mike Briggs, and today's guest, our next guest, Scott Karl, fascinating guy, financial planning, something I didn't know you're supposed to do. I should have started a long time ago, huh?
Yes.
Got a kid in college, $60,000 a year, and I thought it probably could have been ready for that, huh?
Well, I tell you, it takes a significant amount of resources from your retirement plans that fund college, and that's what happens. The aftermath of funding college through your income and your assets can be paying full price for college.
Yeah. It's painful. I feel the pain. So when should they start financial planning?
Well, it depends. Earlier the better, obviously. So when you start a family, you should start thinking about getting to understand financial strategies. And products can be overrated. If you can, 529 accounts, for an example, are very popular, but they could be a wolf in sheep's clothing because of the restrictions and the rules associated with going that route. So you really want to avoid financial products that pigeonhole you into only having one use purpose dollars for paying for college, and you'll end up paying full price going that way.
So maybe you get into it and your kid doesn't even go to college or something.
Correct.
And that money was locked in for college?
That's right. There'll be some penalties, taxations. So the trick is to find a variety of financial products and resources that will be available when the child reaches high school and getting into their college years, in their high school years.
Right.
And there's two parts to this. One is student positioning. Once the child enters high school, freshman year, that's the time to go pursue a college prep expert that can position your child when applying for schools and knowing what classes to take so you're not duplicating your efforts.
Be ready,
and then you need a person like myself that can help position you financially to obtain maximum funding from FAFSA and seek all opportunities and scholarships in the community and to reduce the cost of college.
Right. So you don't want to just feel your way through it. You want to get somebody with some experience and knowledge that maybe could help you set you up.
Very similar to trying to fix the transmission in your car.
Yeah, why would I do that? Why would I do that myself? Yeah.
Yeah, we're the money is well spent for what college prep experts do charge. It's very minimal, but it's a great investment because you're going to get results of getting free money to recover what you may have paid in any fees.
Well, I asked you about planning and when you should start planning because I never planned to have a family. Just all of a sudden I have 3 kids. In just a couple of years, didn't plan that, and so maybe when somebody gets married, they should just start getting ready and approach.
Absolutely. I use a third-party tool. It's a free tool. The gentleman just flashed it on the screen. It's a financial model that it's free to use. There's no fees associated with this.
In these squares that you may or may not be able to see on your TV, it has things like vehicle insurance, property insurance, liability insurance. When I think about how much I make or what my costs are, I have all these costs now, but I don't think about that. You would fill it in a box.
So you take a client's data and you populate this financial model, similar like a game board if you're playing Monopoly. You put your data on it, and it really will present you your financial DNA, so to speak. It's got all your details of your deductibles, liability limits when it comes to liability, life insurance amounts, wills and trusts, where your money is parked in savings, annuities. There's a financial drawer or drawer on that model for every financial product made in America. So this is the starting point to discover cash flow strategies that can get $1 to do the work of $2 or $3. So instead of just money in isolation like in 529 or a uniform trust and minor account or an annuity or whatever, you really want to get those products positioned and working in harmony with each other. And the model is designed for consumers to discover these strategies that they would otherwise not be able to see.
Yeah, and my point is I just wouldn't have thought of all this stuff. I mean, all these boxes, you have to think of all of them.
Including the debt window. People have created debt, and again, student loans are not scholarships. That's just putting you back into more
catch up sooner or later.
And it can catch up with you. We just try to avoid as many costs and fees as possible.
Yeah, I tell my kids, I said, I plan to pay your student loans for you, but if I'm not here, you're going to end up paying them yourself. So.
That's right. So the life insurance part is very important with a strategy that can recover the cost of college. So let's say you get $10,000 or $15,000 from FAFSA, federal loan or federal grant program, and you still have to come up with $10,000 or $12,000, $15,000 a year for your child. And just think if you have more than one child, it just goes on and on. But wouldn't it be nice to have a strategy where you can get all that money back when you throughout your retirement years? So that's what separates my planning from most advisors. I'm not so much product orientated type of advisor. I'm more about strategies that allocate the right cash flows through a variety of products, if that makes sense.
So since I didn't plan and I'm just paying out of my pocket,
yes.
You think I'll ever get the money back? You think my son will say, hey, Dad, you're retired now, here's,
Well, it's never too late to get started. And for example, you have a real estate background, from what I gather,
yes.
here being in the studio. And the real estate is extremely powerful, and it allows you to have tax-deductible dollars in which you can use other people's money.
Yes.
And you can use that. That might be the best, least expensive way to pay for college, using tax-deductible dollars.
Right.
And then you can pay the loans back on the properties either through tenants, future rent increases, and
That's what you mean, like
other
making
strategies.
$1 serve you in multiple ways.
What if you gave a property to charity and started taking income, tax advantaged income while you're alive to offset what you paid for college? So we live in a macro world, and no different than that we live in a macro financial world too.
Now, talk about tax deductions. Young couple married, they don't have a lot of tax deductions except maybe real estate.
Exactly. Their 30-year mortgage fixed is their best.
Their best.
And I was doing a workshop yesterday with the group at the Eye Medical Center, and they were stunned when I told them that what would be the least expensive way to buy a house? Not the quickest way, but the least expensive way. I said, would it be paying cash, 15-year mortgage, 30-year mortgage? I better be careful, your phone lines are going to light up right now. But my point is, when you take into consideration the higher house payment for 15 versus 30, the tax advantages of having a longer tax-deductible loan, and if you put in the cost of money associated with those differences, you'll discover there is no advantage of prepaying a mortgage of less than 30 years.
You get a 30-year tax deduction.
You don't want to, why would you want to pay down a 3.5–4% tax-deductible interest rate, which is the cheapest money on earth?
Almost free money.
It's free money.
Yeah,
it really is after you take into consideration. So,
well, it's not just to buy in the house, but here in the Tower District, so many people I know are paying $1,200 a month for rent. When in the Tower, you can easily buy most of the houses here for $800 a month.
There you go.
So.
You have to, and that's where it requires having a real estate professional on your team. No different
or a financial advisor.
Yeah, but you really need a team. Your CPA needs to be involved with financial decisions, whether you elect to reduce your 401k contributions, even though you're getting a match. You might want to delay that funding for a couple years until you get a strategy designed to get back that
I like the subject. I could talk all day, but they're giving me the wrap up.
Yes.
Do we have that flyer? Can you put up one more time? How should they contact you?
Well,
everybody should talk to a financial advisor.
Absolutely. I don't have to charge my clients any fees. There's a mechanism in my process that if a financial product is needed or warranted to turbocharge a strategy or to make it makes sense, because we use models and do a scientific evaluation. So these relationships I have with these carriers pay me my fee, so I don't have to charge my clients any fees at all for my time.
You're telling me
it's a win-win-win situation.
Call you and ask the questions like I'm asking, it would be free?
Exactly.
Wow.
Now I
Why
have
not?
this on up here as my cell phone, and I do give consultations by phone just to determine if I can help you by tens of thousands of dollars, just by an initial general gather some general information from you, and then I can share some insight on what you're doing, what's possible, and then we can go from there. If you'd like to meet face-to-face, I work from my home office near the San Joaquin Country Club Estates. I'm an independent
Are you a member
advisor.
out there?
Not yet.
Dang.
Wanna
Well, when
get
you
more
are, call me
time.
and we'll go golfing one day.
Exactly.
Anyway, Scott Karl, the number, go ahead and say the number one.
559-307-6103, and my website's www.scottkarl.com.
ScottKarl.com.
Yes.
Call him, it's free. Oh, it's free. We'll be back with more on Central Valley Business right after this.